After oil crashes through the $100 a barrel mark, what's on the energy horizon? Who are the winners and losers? And is the need for alternative power sources all the more urgent? This is Inside Story. Hello, I'm Imran Garda. Is cheap oil a thing of the past forever? And after it reached a symbolic $100 a barrel, what does it mean for the global economy? The record highs sent shockwaves around the world. In relative terms, taking inflation into account, the black stuff hasn't been so expensive since the early 80s. It's all to do with supply and demand, a lack of accessible new sources, plus growing need from emerging giants like China are among contributing factors. While some predict the market will soon steady, others say the longer-term outlook is grim, with prices hitting $150 a barrel in the next 3 to 5 years. Well, joining us to discuss the latest surge in oil prices and its significance are our guests in London, Mamdouh Salameh, an international oil expert and an energy consultant for the World Bank. In Washington, D.C., Tyson Slocum, Director of Public Citizens Energy Program. And in Cairo, Judah Abdul Khalik, Professor of Economics at Cairo University. Welcome, gentlemen. Judah Abdul Khalik, if I could start off with you. The obvious initial question is $100 per barrel. Why?
Well, I think you can pretty well say that the price of oil is correcting itself. If you do remember, there were two oil booms in the past. The latest was in the late 1970s, 1980s. And the real price of oil has not actually caught up with its level back then, or barely so. And so what seems to be a very high price, it's only so in nominal terms, but in real terms, the price is still not that high. And in fact, the world may be paying for, pushing for a lower price of oil for that longer period. We're talking about something like 20, 30-year period now, from 1979 to date. And so I wouldn't be fooled by the nominal price that's $100. In real terms, the price of oil is much lower than that.
But you would agree that it does have it does have a significant symbolic impact.
Of course, and there is no doubt about the implications of that for the producers, for the consumers of oil, and for the world economy at large.
Tyson Slocum in D.C., does it make you nervous when oil hits $100 per barrel?
Well, of course. I mean, that's a psychologically important barrier that was breached. And so anytime that you've got oil becoming more and more expensive, that's going to be a huge economic cost to major consumers, with the United States far and away the largest consumer. But then, as you mentioned, all of these growing economies. I mean, there's really three reasons for oil being as expensive. One, continued strong global demand for oil. That's going to push prices up. Second, production of oil is getting more and more expensive as we run out of cheaper, mature fields, and we're going into new exploration that's going to be more expensive, things like tar sands in Canada and Venezuela. And then third, the increased role of speculators, financial firms like hedge funds and investment banks, moving their money away from the equity crisis and going into what they see as a safer bet where they can make a lot more money speculating on oil futures. I think those three factors are what's playing a role in oil continuing to be at or above $100 a barrel.
Mamdouh Salameh, the huge industrial nations like the US, India, China, are they simply just consuming too much?
They are consuming a lot, actually. And the global demand is growing now at 2 to 3% per annum. And that is one major factor why the price of oil will continue its upward trend. But the governments of the major oil-consuming nations and some of the international organizations like the International Energy Agency and the Department of Energy in the United States are in a state of denial. All the factors mentioned about the reason why the price is going up derive from one fact, and that is the production of conventional oil in the world has peaked in 2006. And if we factor in the inflated OPEC proven reserves, then my research, which I presented to the World Bank, shows that the peak year was 2004. And we have used all the cheap oil. We are now looking for more expensive oil, which we are not finding, because the world is consuming up to 31 billion barrels a year. We are finding between 5 to 6 billion barrels, if that figure. But there is one point I would like to add. The fact that the price reached $100 is not surprising. And the fact that it has not affected the global economy is not surprising. The $100 price is in 1979 equivalent to what the price was in 1979, around $40. It has to go up to $150, $140 to $150, because before it starts to affect the global economy.
Judah Abdel Khalik, I know you mentioned that we must put this into a historical context and adjust for inflation. If you could paint the picture for us, how different is the current oil crisis from previous ones?
Well, the previous two oil booms, if I may put it this way, the one in the early 70s, 73, 74, and the one late 70s, early 80s, came against the backdrop of military and political diplomatic crises in the region. If you remember, the October War of 1973 and the Iranian Revolution in 1979. And this impacted in the form of sudden interruption of supplies and rising fears of prolonged interruption of supplies. What we're witnessing now is actually the influence of long-term forces that resulted from depressing the price of oil for so long. We've depressed the price of oil in real terms for 30 years, and now we are starting to feel the pinch. What I would like to say, in addition to what has been said, is that, of course, speculators and rising demand are forced. But I would like to say that this year, 2008, it's expected that more than half of the world's population will be living in urban areas. And that has far-reaching implications for the demand for oil and the future price of oil. Now, it's interesting to note that when it comes to a rising price of oil, here the old adage saying a man's meat is another's poison, and we have to think about who are the winners and who are the losers. It looks like the oil producers are winners, but I would like to add to them the oil producing companies. I think these may be the biggest winners of the price hike. And I would also say the United States vis-a-vis other major industrial countries, because the strategic net worth of the United States being in full control, almost full control of the large
Interesting
oil
that you mentioned that. I
Middle
want to pose it to Tyson Slocum. I want to ask him if he agrees. Do you agree that the major oil corporations are part of the winners when it comes to increasing oil prices?
Of course. I mean, any major producer of oil, whether it's a state-owned oil company in Venezuela or Saudi Arabia, or a publicly traded corporation like ExxonMobil, they are going to continue to benefit. We've seen extremely strong earnings from international oil companies. In fact, oil companies in America have the strongest profits of any sector in the economy. So we're going to continue to see huge profits as long as we've got very expensive oil.
Mr. Salameh, is there a general view, particularly from the Western world, that OPEC can maybe ease the situation by increasing supply?
Unfortunately, no. OPEC has no control of the oil price now, and the reason is that they have no extra production capacity. They are producing virtually at full capacity. They don't have a single barrel to add, except what amounts to around 400,000 barrels available in Saudi oil, in Saudi Arabia, and made of heavy oil, which nobody wants to use unless there is an emergency. So OPEC is helpless at this stage. It cannot add production. It needs few years before it can expand its production capacity. Even by the year 2010, OPEC and non-OPEC producers will have 1 million barrel of net additional capacity. So they cannot control the price. OPEC is observing the price like a bystander. It cannot do anything because it has no capacity.
All right, gentlemen, stay with us. Time for a short break. When we come back, we discuss much more, including the negative and positive impact of the declining US dollar. Do stay with us.